Welcome back to Trades and Gains, everybody. And what do you get when a bond auction flops, China gets ticked off, and Target forgets how to profit? An 800-point Dow drop and the biggest panic put party we've seen since SVB. Let's break it all down, from rate wreckage to whale-sized options flow. You know the drill. No fluff, just straight fire. So to kick things off, our big boys, the Dow lost 1.91% or 800 points. Ouch. The S&P 500 was down 1.61%. The Nasdaq also saw a 1.41% drop. Now, what set off this disastrous occasion? Well, a terrible 20-year treasury auction demanded dried up. Yields spiked hard off of that news. Now, the 10-year yield was at 4.59%. And mind you, anything over 4.5 is a bad sign for the market. And the 30-year ticked up over 5.09%. And again, that is also the highest since 2023. We are seeing numbers, folks, that we've not seen in literal years. So there is some cause for concern. Now, Citi came out and said the narrative just flipped from tariffs cooling to debt panic mode. And there's risk off hitting everywhere. Real estate, small caps, and high beta names all nuked. And by the way, Russell 2000 was down 2.8% off this news as well. Now, we also had an absolute macro mess hit us as well. We have China trade tensions, which are back and hotter than ever. The U.S. drops new warnings of Weiwu AI chips. China's mad. Shocker there. And the tariff truce is absolutely on life support right now. We also have the Trump tax plan, which equals $4 trillion in red ink. The new House bill could balloon the deficit. The macro risk just leveled up, and traders are finally starting to open their eyes. Like, the tariff pause narrative is absolutely unraveling, and macro risks are about to take back center stage. So you remember the days where those macro events could move the market in one direction? It looks like we're heading back towards that. Now, another thing we had here, Target misses, and retail, it just shows that retail's on absolute thin ice right now. Target was down 5% on bad Q1 earnings, plus very, very weak outlook. They refuse to say if they'll raise prices, and that uncertainty equals a sell-off. They also were suffering with some DEI backlash, plus tariff pressure, which is a double whammy kick in the face. So are we really shocked that they dropped as much as they did? Now, let's go ahead and head over to our favorite analyst tool, which is Investor Central Club. And if you still don't have it, go ahead and sign up and go ahead and get that code for $30 by using the code 130. But to kick things off, the ETF, we had a wipeout. We had 57.6 million in SPY overall flow, with 46 million in that in puts. The 510, 475, and 440 put for June 30th, all laddered bear strikes. Someone is betting on a summer crash coming, and that makes sense, especially if we don't get a rate cut until September. Or, according to some analysts, we might not get a rate cut at all this year. IWM saw 50.3 million in total, with 47.9 million of that going into puts. Small caps are getting shorted into the abyss, but let's not be shocked. Shout out to Printing Tendies, because he's been saying IWM and the small cap market is going to be trash in 2025. QQQ saw 25.8 million with 15.8 million in puts bias. Cautious, but not full panic yet. We also saw GLD, 8 million mostly in puts. Even gold couldn't catch a break today, and that's usually the safe haven that these cowards run to. Now we did have some high conviction sweeps here. We had FSLR with 23.78 million call block due for December 25th. Hold on, let me go ahead and pull up our flow for the day here real quick for you guys. Don't worry, I'm super fast at this. Or maybe not. Anyways, we had FSLR come in hot and heavy. We saw a nice $23.78 million call block for the December 25th 195 calls. We also saw Google with 4 identical $2.7 million calls, equaling about 10.8 million for December 25th 185 call sweeps as well. We also saw CDNS 4.65 million for January of 27 370 calls. Long dated, quiet semi-design play. That is a big brain bet, boys. Now let's go ahead and look at some of our unusual activity. We saw 3.89 million dropped on the, hold on. So we had 3.89 million here dropped on SPY 1510 puts due June 30th of 2025. We saw 3.71 million dropped on 475 puts due June 30th. And we saw 1.05 million down here dropped on June 30th SPY puts as well for that 440 strike. Laddered puts equals someone's prepped for total destruction with them. We also saw DKS with 1.54 million on July 25th, 210 calls, a retail sleeper pick here. PDD, we saw 291K on March 26th, 85 puts. China Tech Pain is incoming. And NTNX, we saw 162K on $75 puts for June 25th. Short-term semi-hedge. Now, dark pool, quiet but huge. CDNS, smart money quietly stacking long-dated calls here. We saw MU and ARM, and we also saw Netflix and PDD. We also are seeing a crypto reversal take news here as well with a rally. Bitcoin hit 109K, but it also pulled back. Bitcoin hit an all-time high before rolling over with equities. Coin Mara rode early, but they also faded late. Stablecoin regulation is helping sentiment, but the treasury yield panic crushed all risk by close. Now, this wasn't a buy the dip type of day. It was a warning shot. Again, I don't know how many of these we're going to get, so please take them with a grain of salt. Yields are above 5%, which equals real problems. Target, IWM, and SPY are technical breakdowns. Options flow screams protection mode. And the bright spots, FSLR, Google, and CDNS, we have long-dated conviction plays there. Tesla is still catching that call flow as well. Macros are back and debt is loud. Whales are absolutely hedging hard, so keep your eyes out and watch 5,800 on SPX. Below that, go ahead and buckle up and call your mama. Drop your top trades in the comments. Like and subscribe if you're tired of the CNBC bedtime stories. We bring the tape every single day, baby. Have a great night, and I'll see you guys tomorrow for another episode.